Okay, so I know I have just about 30 minutes, so I may end up skipping a few slides because I believe that most of you also wanted to look at some of the current markets. So let's go ahead and get started. And this first slide, basically what we're looking at is a chart of Adobe. It's a daily chart. And what would have told you to be a buyer in Adobe last October? Okay, and nobody's really supposed to know the answer, but I'm going to show you how we found that. Now, let me just grab my arrows real quick. Okay, so we're going to start with one of the symmetry projections that I used to identify this area of support. One of them came from comparing swings in the same direction, and I do that with all of the swings, but in this case, I'm just showing you an example of one of these. So if we have a prior high to low swing that was $54.87, and that being projected from the recent high gave us possible support at 258.24. Okay, and notice that these swings were similar because you have 54.87 versus 53.54. So that was one of the price relationships. The next chart shows you one of the other swings on the same chart that came in from this prior high to low that was $55.77. I projected that from the last high. That gave us 257 as possible support. But again, notice how similar these swings are, 55 bucks, 53 bucks. I mean, not perfect symmetry, but close enough. And then the next decision actually came in from running a retracement on the daily chart, this major low to high swing. We ended up having an overlapping 50% retracement that came in at 259.03. Okay, so 3 price relationships. And then at least one more price relationship came from measuring the prior low to high swing and extending downwards. The 1272 extension came in at 259 also. So let's see, let me grab this next chart. Oh, there actually was one more projection. So here, again, I like to compare swings in the same direction because many swings tend to be similar to other swings on the same chart. So in this case, I took the prior high to low swing, which was $22.05, projected it from the lower high that gave us 259.45. And again, these were very similar, not perfect, but 22.05 versus 21.94 is pretty similar as far as a price decision. So this is just an example. I am going to go back to the basics and show you really what I do, but here, what we've done is we put together the coincidence of 5 price relationships, which is what I like to call a Fibonacci price cluster, between 257.34 to 259.46. So the answer to that question was that there were 5 key price relationships at that low that was made in October. Okay, and I'm going to give you an idea of how to find that. We actually had 3 100% projections of prior swings. We had a 50% retracement of another, and a 1272 extension of another swing. So that's pretty much what I'm trying to do every single day, all day long, is to look for key trade setups based on the Fibonacci ratios. But most importantly, you know, one of the main types of trade setups that I do every day are called Fibonacci price clusters, which essentially means it's a cluster of at least 3 Fibonacci price relationships that come together within a relatively tight range. So this was a cluster. All right, so now, why would you use this type of Fibonacci analysis? Well, it enables you to identify high probability, relatively low risk trade setups where the risk is clearly defined along with the targets. This works on any time frame and essentially any good market data. I mean, you can't give me something that's only been trading for 2 trading days. I really can't do any analysis on it, but you know, anything else is good. You know, Apple, the bond futures, the stock futures, it works on pretty much everything. Now, I have in the past applied this method to stocks, ETFs, futures, and the Forex markets, and I've seen it work on all of them. It's also an excellent methodology to use with option strategies. And then also with this method, you can see things in the market that you will never, ever see using indicators alone. For anybody who's not familiar with the Fibonacci number series, this is it. But what the important part is I don't use the actual Fibonacci numbers, but I use the ratios derived from the number series to do this analysis. So the ratios that I'm using, 382, 50%, 618, 786, 100%, 1.272, and 1618 I use all the time. Occasionally I'll use 236 if it's a very large swing. I use 2618 as a target number 3 for any of my trend trade setups. And once in a blue moon, I may also, if we've had a huge swing on something, I may also look at 4236 as an extension target. That's if we pass 2618. So those are the actual ratios that I use. And if it doesn't make sense yet, I'm going to show you how we do this. Now, I don't think I really have time to go over this slide, but you can always go back to it later because I'm making the slides available to you. But this is basically, how the ratios are related to each other. So let's start with price retracements. So I do 3 different types of price relationships. I run price retracements, price extensions, and price projections. And then I put together all the information and I look for my trade setups. So here, for example, let's see, here it is. For support, I'm going to run the retracements of any low to high swing on a chart. And I'm going to use the ratios of 382, 50%, 618, and 786 as possible support. I'm also going to run prior high to low swings and use the same ratios for possible resistance. So here's an example of how you would do that. So this is actually a daily chart of square and measuring a prior low to high swing. Okay, we've got the ratios here, 382, 50%, 618, and 786. Well, how do you know which of these that you should take a trade against? Okay, you don't. If you're using, I rarely use single levels unless it is something of a major swing, but typically that's why I'm looking for the confluence of other price relationships to tell me, where we might actually put in a low. So in this case, nothing at the 382, nothing at the 50%, but 618, we ended up putting in the low and then did start to see the resumption of the rally. An example of a retracement on the flip side would be this prior high to low swing, running the same ratios. In this case, it was a large swing, so I also used 236. But again, notice, nothing really here. You did have a little bit of a move off of this 382 retracement. You had a stall at the 50%, but the high was made at 618, and then you did have a very powerful reversal since then. All right, let's see. The next type of price relationship that I use is what I call a Fibonacci price extension. Now you're going to use the same exact tool that you use for the retracements, because for me, a price extension is essentially a retracement beyond 100%. So I'm using the ratios of 1272 and 1618 in this case, and I'm still going to be looking for key support or resistance. So for example, measuring a low to a high, extending downwards, 1272 and 1618, that's where I'm looking for possible support. Or I'm taking prior highs to lows on that same chart, run the extensions to the upside and looking for possible resistance. So an example of an extension, okay, this is actually, it's an old chart of Facebook, but here it shows you actually a couple of examples of extensions and why you want to watch them. So for example, measuring a prior high to low, you basically failed at this extension twice. You didn't really do anything at the 1618, okay? But again, you always want to watch these extensions for possible failure. At least you have the heads up. Now another swing in this case, measuring a high to a low, ran the extensions, and we really didn't see anything at the 1272, but at the 1618, basically you put in a top and dropped, looks like it was about $15 from there. Okay, so that's an example of an extension on a chart. Here's another example. This is a daily chart of Intel. This is where I've measured a prior high to low swing, and I ran the 1272 and 1618 extensions. 1272 didn't do a thing. 1618, you know, just like it was almost to the tick. Actually, in this case, it was to the tick. So 5085 was the extension and 5085 was the actual high. Before it dropped, it looks like just a bit over $5. Okay, so we definitely want to watch these extensions, especially if you're in a trade. If you're in a trade and all of a sudden you're up at extensions, it's a really good time to ratchet up stops. This next example is CMG on a weekly chart. And when CMG was going straight down way back when, we wondered, you know, where we might put in a low. So I did look at the weekly chart in this case, and I measured the low to the high swing. And you'll see that the 1272 really didn't do anything, but the 1618, again, you know, if you knew that we were coming into a very important extension, you would ratchet down your stops and be out of it. I mean, that's something that you'd want to know, because we did put in that low there, right on top of, well, the actual low was made at 263, but that was right on top of the 262.71 support. And I think it looks like the initial rally may have been about $80, just off of a single extension, okay? So that's pretty much it for extensions. The third type of price relationship I use is where you are allowed to use 3 points on a chart to run possible support or resistance. In this case, if you measure a low to a high, then you're going to project from another low for possible resistance. I'm always using 100% and then sometimes 1618. So we'd look for resistance at 100% of the first swing up and potentially 1618. You'd look for possible support if you project from the lower high of 100% or 1618. Okay, so here's an example of what a projection looks like. This is where I've taken a prior high to low swing, because I want to compare swings in the same direction because they tend to be similar to each other. And notice that this high to low was $3.12, projected from the next high, gave you the potential support, and it was very similar at $3.11. Okay, so this is what I like to call symmetry. Symmetry is similarity or equality when comparing swings in the same direction. And you'll notice that some of these others were also pretty similar. This one was 333. This one a little bit more. Well, these two are similar, 357 and 350. But that's why I always watch those prior swings, because new swings tend to be similar to those. We saw some of that today in the stock indexes. All right, let's look at another example. This is a 60-minute chart of Google. So here, I'm measuring a prior low to high swing, and then I'm projecting from another low to look for possible resistance. In this case, you really didn't have any resistance at the 100% projection, but you ended up putting in the high at the 1618 projection of that first swing up. So again, we're just watching these areas for support and resistance. They're not always going to hold. They're not always going to turn the market, but they do often enough that if you watch these with triggers, that's where you're going to find the best trades to look at. One more example of symmetry is in the S&P futures contract. Now here is where I have a prior low to high swing with a downtrend, and I projected that from this next low. Now I would have also projected it from here, but we never got up into that resistance. But anytime it made a new low, I had to run the resistance from these prior swings off of the new low. And in this case, looks like 30.97 was the resistance. The actual high was made at 30.96 and a quarter. Okay, so it pretty much hit resistance. That's close enough. And what you would typically do is go down to a lower time frame chart to look for a sell trigger against that resistance, and then you take the trade. And then where is your risk? Your risk is going to be defined above this high. All right, let's talk about price clusters. So again, my most powerful trade setup is called the Fibonacci price cluster. Definition is the coincidence of at least 3 Fibonacci price relationships that come together within a relatively tight range. Again, this was a really good example of, a relatively tight range and where these levels all came together in Adobe. But let's look at, what you would do to, take a trade. Are you supposed to just like step in front of the freight train? I say no. So what you really want to do, again, is look for a trigger that tells you that it's worth placing a bet against the zone. And for this, we always want to go down to a lower time frame chart because that's going to get you triggered into a trade relatively close to where your definition of risk is. So against that Adobe chart, here's an example of a 30-minute chart or swing trigger. And for a trigger, what I like to use, and you can use something else, if you want to test it and make sure it works for you. But what I like to see is the moving average crossover. I use the 834 EMA combo. So I want to see both the moving average crossover to the upside for buy. And I also want to see a pattern shift. So what I mean by that is we have a pattern of lower lows and lower highs. So I wanted to see that shift to potentially higher highs and higher lows. And what we need to see is a prior swing high taken out. So once both of those things occurred, that was right around the 265 area. Maybe just, no, is that 265? All right, sorry, it's a little bit hard to read, but bottom line, once it did both of those things, you can be a buyer and your initial stop would be underneath the low or underneath the low end of the zone. So that was your trigger, and we did have a nice rally that followed. All right, I'm going to go over a few more examples, but I think what I really want to do is maybe go over some of the current markets, but I want to give you an idea of what you can do with this. This is an example in Apple. This is a daily chart in Apple. And, this is what I would call a trade setup. The trade setup came from projecting 2 of these prior declines from the new high at this time to give you possible support. It also included a 50% retracement of another swing and then a 1272 extension of another swing. So the zone of support came in at, whoops, let me go back to that, at 214.13 to 215.75. It hit, it held, and if you went down to the lower time frame chart, it did trigger an entry. And, the initial rally off of it, you met, actually, I think you met all 3 targets. That was a rally of $34.62. We've got another example where, whoa, I have to be careful with that mouse there. All right, where we have, multiple projections in the case of Amazon, for example, where we compared swings in the same direction. And let's see, I think this one. So this swing was 350.74. This swing was similar at 364. This swing was, let's see, similar at 348. This one was a little bit larger. But bottom line, when you run all possible swings on a particular chart, you're going to find these price clusters, okay? Because you'll be coming from, many different swings. For example, retracements of this swing, retracements of this swing, projections of these prior swings, extensions of other swings, okay? And when it all comes together, we look at that as an important price decision. And it was, I think, after earnings last time that, after holding this support and a couple of other buy entries since then, that you met, the first major target, which was 21.31. Don't think we need to do that. I like, this is an example that was in the Dow Diamonds, okay? And this mostly used symmetry, where, if the market's pulling back within a larger uptrend, I still would have considered it an uptrend as long as we held above here. So I wanted to look for support that came in above this low. And if you compare these swings, you'll see it. 2026, 1982, 2006. I basically projected those prior declines from the new high, came up with an area for support, or potential support, because we never know if it's really going to hold. But that ended up hitting. Okay, yeah, that's that one. It hit, it held. Your initial rally, wait a second, diamonds. Okay, this was the initial rally off of this symmetry support was 1951. Okay, but you definitely saw more than one rally. The first test of it, you saw a nice rally, but it was still a valid support decision as long as we didn't go through it. So when it retested it, you're still able to look for new buy signals at that point. Okay, I want to show you one other example in Disney. This is on a weekly chart. And again, when the market really breaks down, I have to kind of get away from the daily charts and look at the bigger picture, because a lot of times this is what I'll find, even though the daily chart would have looked pretty bad. If you looked at the weekly, you saw that this prior decline was $19.90. This decline was $19.85, and I projected both of those from that last high. We also had, it looks like I think it's a 382 retracement of one swing plus the plus that symmetry. It hit, it held. The zone was 127.25 to 127.69, and it met target number one. Okay, so basically continue to hold above this support, and then met target number one, and then rolled over. So if you remember what I said earlier about extensions, many moves tend to terminate at extensions of prior swings. This is why I always have my traders ratchet up stops at that point. All right, let's see. There's a couple others. There is one more that I really, really like as far as an example, and this is Sherwin-Williams. This was a weekly chart. And here, again, the daily chart wasn't looking good. So I wanted to see if there was anything that would have caught this low on the weekly chart. And I found a prior decline that was $76.08. I found another decline that was 73 bucks. And then I projected both of those from this high. And that gave us the 359, 362 area as far as support. And this decline ended up being very similar at 72.79. So once you got into the area of this support, as long as we held above it, you would go down to a lower time frame chart, whether a 15-minute, 30-minute chart, or even, you can even use these levels to day trade off of, with a 1-minute chart. But once we held and triggered, we actually met 2 targets on the upside. And then the 1618 pretty much capped it. So again, anytime that you get up into extensions, I would definitely ratchet up stops. All right, and then I do have some other slides, but I think what I'm going to do is I probably only have about 5 minutes left. So let me just go over a couple of current markets and what's going on. And one of the things that you're going to want to be aware of is that in the S&P, we have extended the prior high to low swing close to target number 2. And if you run, I have timing that I use the same ratios to run time resistance to the market. So here, what I'm doing is I'm just going to make a report off of this last low to see when the next high might come in. So this is, okay, so here is where we have a standout grouping of cycles. It'll show up on the program this way. Underneath here, it actually shows you the cycles. This is Robert Miner, who is my mentor. This is his program. So it shows you what the actual cycles are for timing. And then if you look over here, you'll see that these standout cycles, 96 and 70. So, oh, actually 70 was pretty high. So I included this. So 428 to 430 is a time window to anticipate a possible high that could end up being more important. So that's one thing that you want to know about the current markets. And as far as, let's see, any other trade setups, I'll give you an example of something that we are looking at, for example, in BABA. So again, I'm looking for a cluster of price relationships. And in this case, we have 1, 2, 3, 4. There's at least 7 price relationships that come in between 196.71 to 198.71. So bottom line is if we test and hold above this zone, I'm going to go down to the lower time frame chart and look for a trigger. If you see a trigger, you know, you can take a trade, and then the typical target is going to be the 1272 extension of the swing into the zone. So, I mean, we haven't quite hit the zone, but we're very close. You might see something in this, you know, in the next couple of trading sessions. But let's say if it holds above here, potential is up here. Maximum risk would be underneath here. Minimum risk typically underneath the low that's made prior to your buy signal. Let's see what else we have. Okay, this isn't quite happening yet, but for example, this is a chart of Lulu. Now the last setup in Lulu came in here, and I ran it the same way. I basically took 100% of these swings, projected it from the high at that time. We had almost perfect symmetry hold at this low. And actually, let me label it. Okay, so that was 1992. Okay, so here it is. So this was, you know, taking basically this high to this low, projected from this high is what gave me the support here. And then within the next trading day, it triggered and it rallied $30.99. So now what you do is you rinse and repeat until it doesn't work anymore. So we have the same bullish pattern in Lulu. So what I've done is I've taken those same swings and swings inside the swings, and I've projected them from the next high. And that actually gives us two areas for the next potential buy entry. First one, let's call it 217.57 to 218.34, or underneath that 212.40 to 213.13. And again, what we want to see is we want to see a test and hold of a zone followed by a trigger. And then, you know, that tells you that it's worth placing a bet. So I'm not sure that I'm going to have time for any questions, but if you are interested in the slides, I know that you can grab them from this link. So let me just post this real quick. Okay, so it doesn't look like I can send it to you, so somebody else may have to post it for you. But if you are interested in the slides from the presentation, there actually was more on timing work and all that stuff, but I just didn't have enough time to do it today because typically I speak for about an hour. So let's see if I can find one last decision for you. Not that one. Well, we do have another similar decision coming in Twitter. Okay, the last setup I did a free video that was actually on Twitter, where I showed you where I had a couple of price cluster zones, and the I forgot which one is if this was the first one or the second one, but we did hit and hold the support, and you met two targets on the upside. You met the 1618 target of this swing. So now, again, we're going to look at it and say, you know, rinse and repeat, because if the bullish pattern is going to remain intact, it needs to hold above this last low. So I'm running the support that comes in above that low for the next possible entries. The first area comes in at, let's see, 27.52 to 53, and the second zone comes in at 26.40 to 43. So that would be another setup that I would look at for a possible buy entry. And I think I've run out of time here, so hopefully we can pass on that that link for the slides if you're interested, because I know it's let's see, yeah, it's just under simplertrading.com/Carolyn, and you'll find the slides there and you can download them. So thanks for having me, and I'll make way for the next guest.